Even though the stock price for Nikola Motors is falling down, I'm going to show you how I made 38% profit in one single day. So I've noticed that Nikola Motors has been in the press a lot, with a lot of good and bad press. They're the car company that, they've got electric power cars as well as hydrogen powered vehicles. And so I decided to take a look and see if there might be something here worth investing in, right? So they've talked about the Nikola Badger, but as we've soon found out recently, this is not a real vehicle. It's been just a rendering, an artist rendering. So they don't have a real vehicle yet that they've produced, but there's been a lot of buzz in the news lately about this company. I guess number one is they talk about this Nikola One. Nikola reported back in 2016, Trevor Milton reported that, they have this electric hydrogen powered vehicle available, but as it turns out, it's not really fully functioning. And so what we saw in the press release was actually this vehicle being towed to a hill with a slight incline, and we saw it rolling down this hill. So it wasn't really moving on its own power, and so that's come under a lot of scrutiny. Now, it looks like a really nice product. However, it's not real yet. They haven't realized it yet, and so there's been a lot of bad publicity associated with that. Along with that, there's been claims of patent infringement with the wraparound window, the opening of the door. In fact, the whole design of this semi itself has come under question, most notably from Tesla, the main competitor. But I wanted to see the investment opportunity, and here's what I found, and let me walk you through it. So with every stock investment I make, I always look at the charts. I'm a chart kind of guy. And so if I go back and look at Nikola Corporation, stock symbol NKLA, we can see that they've had a pretty fairly recent run up, right? So this is in May of 2020. We can see a little bit of a spike here, and then all of a sudden we see this huge spike in the beginning of June of 2020 where the price goes up to about $92, $93. So that was huge. And then I see it slowly winding down, right? So it hit this high of about $92, $93, and then it's been going down ever since. And I follow the stock, and then what I notice is right around here, early September, GM decided to invest $11 million. And so that gave the stock a big bump in price. But then again, all the bad publicity started coming out, how they've been actually faking what they're doing. They don't have any real vehicles, they don't have any profits, they don't really have any proprietary technology. Turns out what they're building are vehicles based on other technology from other corporations, other individuals, and so they're putting them together, but there's nothing proprietary there, nothing on their own. And so we see this stock price slowly dropping down. In fact, if we look here on September 24th, the price is right around $19, just about $19. So at that point, I decided, hey, I think I could make a play here. So let me show you how I invested in this opportunity. So even though Nikola Corporation is having some financial and publicity troubles, I decided to craft a trade based on this situation. And let's take a look at what I did. So on September 24th, 2020, I placed a trade that consisted of two separate parts. And let's take a look at them. So part one, I'm selling an option contract for Nikola Corporation, symbol NKLA. And it's going to have an expiration date of September 25th with a strike price of $21. And for that, for this option contract that I'm selling, I'm going to receive 74 cents per share. Now that's, keep in mind that each option contract involves 100 shares, and at 74 cents per share, that means I'll receive $74 for selling this option contract. Now in part two, I'm going to buy an option contract for Nikola Corporation, same stock symbol NKLA, and has the exact same expiration date, September 25th. And I'm going to pay $21, and it has a strike price of $21.50. And for this option contract, I'm going to pay 55 cents per share. So the difference between what I'm selling, and that's going to be the money that I receive in part one, and what I'm buying in part two, 55 cents per share, the difference is 19 cents. And so this trade is called a call credit spread, and it's for the stock symbol NKLA. And this option contract has an expiration date of September 25th, right? And it's the 21-21.50 call credit spread with 19 cents. And that's the difference between what I sell it for, the 74 cents per share, and what I'm paying, the 55 cents per share. Okay, so my collateral is going to be $50. And you calculate that by taking the high strike dollar amount and you subtract the low strike dollar amount. So for the 100 shares, it would be $2,100 and then $2,150. So if I take the higher number, which is the $2,150, and I subtract the lower number, the $2,100, I come up with a difference of $50. So my collateral is going to be $50. That's what I'm going to have invested in this trade. And for that, I'm going to receive a $19 premium. Again, that's the 100 shares times the 19 cents. So let's take a look at what happened. So here we are on September 25th, and we can see that Nikola, NKLA, stock symbol NKLA, closed at $19.46. Stock symbol NKLA closed at $19.46. And what does that mean? Well, that means the option contracts that I wrote, the one part one was selling the option contract and part two was buying the option contract. Because the stock price was lower than my strike prices, these options expired worthless, which means as a result, the $50 collateral that I had put up is actually returned back to my account, and then also I get to keep the $19 premium. Next, let's take a look at the actual transaction as it's recorded in Robinhood. So for this particular trade, it's a call credit spread, and it's got the two parts to it. So this is for the first part where I'm buying an option contract that expires on September 25th, and it has the higher strike price. In this case, it's $21.50. And then the other part is where I'm selling a contract that has the same expiration, right? So it's September 25th, and it has the lower strike price. In this case, it's $21 even. And so putting these two trades together, the buy and the sell, it's called a call credit spread. And for this transaction, which I submitted on September 24th and it got filled, I got paid $19. And so that went directly into my account. So I made the transaction on the 24th, and the option contracts expired on September 25th. So my profit from this trade looks like this, right? So I risked $50 as my collateral in order to write the call credit spread, with the two different parts. So that's my $50 investment. The premium I received for writing this call credit spread trade was $19. So that's mine to keep forever, no matter what happens. And so as an end result, I made 38% return on my investment, right? So I had $19 received off of a $50 investment. So that's a 38% return. That's not too bad. And that's just for a one-day trade. So using this same strategy then, I decided to write a second trade. And let me show you what that looked like. So on that same day, I used the two different parts, right? So I'm going to write an option contract where I'm selling NKLA with an expiration date of September 25th, but this time I'm going to use a $22 strike price, and I'm going to receive 54 cents per share for this option contract. And then in part two, I'm going to buy an option contract for NKLA with the same expiration date, September 25th, at a different strike price, $22.50, and I'm going to pay 40 cents per share for that. So this is my second trade. It's also a call credit spread with an expiration date of September 25th, and it's a $22.50, and the difference is 14 cents. Recall that my collateral is going to be the difference between the high strike price and the low strike price. And then I'm going to receive a $14 premium for actually writing this call credit spread, right? So this is money that I receive because I wrote this call credit spread. So recall that on September 25th, the very next day, 24 hours later, NKLA closed at 1946, which is below the strike prices. So those options expired worthless. And so my collateral, that $50 collateral, returned back to me, back to my account, and I get to keep the $14 premium. And so here are the transaction details for my second trade as they've been recorded in my Robinhood trading platform. Again, it's a call credit spread. It's for the Nikola shares of Nikola, and this option contract's got the two parts. This first part here is where I'm buying the option that expires on September 25th, and it's at the higher strike price. So for this second trade, remember it's $22.50. And the last part is where I'm selling the Nikola option contract, and it expires on September 25th as well, and it has the lower strike price. In this case, it's $22. So this trade involves the buying and selling of the Nikola contracts that expire on September 25th. And for this particular trade that I submitted on September 24th, I received $14 into my account, and that's mine to keep forever. So my profit from the second trade, remember I risked the $50, and then I received a $14 premium for actually writing the call credit spread. Because my options weren't exercised, they expired worthless. $50 comes back to me, the money that I put at risk, and I also get to keep the $14 premium, which is a 28% return on my investment. Not too bad. A little bit less. It's not the 38%, but it is 28% in one day. So from both of my trades, remember I risked $100 total as my collateral for the two different call credit spreads. There were $50 for each spread, each different trade. And I received a total of $33 back, right? So I had the $19 premium plus the $14 premium. So that's a total of $33. So I put $100 at risk. I received $33 in premiums. I got to keep my $100 and the $33 in premium, which means I made a combined return on my one-day investment of 33%. Hey, thanks for watching this video. If you enjoyed it, be sure you smash the like button. That way I know you want to see more videos just like this one. And don't forget to subscribe so you get access to all my videos, and click on the bell icon so you get notified every time I release a new video about simple option trading. It's what I do to earn extra income working from home using just my laptop computer. So make a plan, take action on that plan, and start living your dream.